You can have the perfect setup on the 5-minute chart, perfect structure, perfect candle, perfect level, and it still gets stopped out. The reason you ignored what the higher time frame was telling you. Today we fix that. Welcome back. This is the final video in this series. We've covered market structure, fair value gaps, ERL liquidity pools, and candle strength. Today it all comes together with higher time frame bias, and I'll be showing you the full top-down process live on PU Prime's web trader. So let's get into it. This is not financial advice, this is for educational purposes only. So here we are on the PU Prime web trader, and we're going to be talking about the timeframes and how you can build them in. So let's jump into the charts. Now, every time frame shows you the same price action, just compressed or expanded. The daily chart shows you 1 candle per day. The 1 hour chart shows you 24 candles for that same day. The 5-minute chart shows you 288 candles. The information is the same, right? The perspective is completely different. The higher time frame daily 4-hour tells you the overall story. Is the market in bullish structure or bearish structure? Where are the major levels? Where is the significant fair value gaps? That's a context, that's a bias. Everything on the lower time frames has to be understood within that context. Now, if the daily chart is in strong bearish structure, lower highs, lower lows, price pushing down, and you spot a bullish setup on the 5-minute chart, you're fighting the bias, right? You might win occasionally, but statistically you're trading against the weight of the market. That's not an edge, that's hope. The process is simple. Start at the top, daily or weekly, and establish the overall structure and direction. Then move to the 4-hour and confirm that the structure there aligns with what you saw above. And then go to your trading time frame, right? The 1 hour, the 15-minute, the 5-minute, and only take setups that point in the same direction as both higher time frames. All three pointing the same way is when the probability is genuinely in your favor. So here that we were in a bearish market structure, right? And the daily was also bearish. So to be taking buys is very counterproductive. So then obviously when jumping down to the 15-minute, we can then look for more bearish structure, right? So you can see prices coming down here, still making higher highs, still making lower lows, lower highs, prices pushing down. These are very good areas to trade, right? When price is just carrying on pushing down. If trading feels confusing or inconsistent, it might not be your efforts. It might just be a lack of clear direction. Let me introduce the Signaler.com, a signal service focused on delivering precise, well-structured trade ideas without all the unnecessary noise. With the Signaler, you get carefully prepared trade setups, exact entry points, take profit and stop loss levels, and straight to the point market insights that actually make sense. Every signal is built around discipline and proper risk control. There's no exaggeration and no overtrading, just calculated opportunities based on real analysis. And if you want to see the quality for yourself, they offer a 7-day free trial, so you can test the signals before making any commitment. Stay focused, follow structure, trade with a plan. Try the Signaler.com today. Now, let's get back to the video. And this is how to align yourself with the flow of the market. And there are so many different ways that people trade, right? Some people, they like to just use generic supply and demand, right? So you can see here, price is pushing down. We have a supply, and I'll put it in red for you there, right? Price continues to push down. We get a break. We have another supply. Price just respects these supply zones, right? As you're pushing down, this is another great way for marking it out. As we spoke, obviously, with the higher time frame bias, looking at fair value gaps, if you can get these areas from fair value gaps as well, and you get a market structure shift on the 15-minute, another great way to capitalize. But as you can see, it's just so easy. Once you've got your higher time frame flow of the market, You just want to be looking for trades in that direction. It keeps you on the right side. It saves you being the liquidity, and you've got your areas to target. You know, even when we spoke about ERLs, they're the same as the market structure points. You just know that price is going to come down and take these liquidity points. It wants to go that way. When you've got the flow of the market, you've got your targeted points as well. Now, obviously the daily or weekly, right, they establish the overall structure, the major levels, the significant fair value gaps. You know, the 4-hour confirms the structure's aligned, right? It identifies the current phase. Is it a push or pullback? Trading time frame, 1 hour or the 15-minute. You know, only take setups in the direction of both higher time frames, right? If all three align, that's your highest probability opportunity. If they conflict, wait and don't force it. You can see here we come up into the fair value gap on the weekly. Price is pushing up, it's pushing up, but then we get that market structure shift, and look what happens. Price just starts to tank. That's how you know that you're going to start aligning with this higher time frame bias. The structure was bearish, the fair value gap was bearish, and now the 1 hour is starting to show bearish too. So we start to line it up. We get that break of structure, we come back up into a 1 hour supply, price rejects, and we start to melt. It's that simple. Now, everything we've talked about across this series, structure, fair value gaps, ERLs, candle strength, time frame bias, all of it is something you can practice and apply right now on PU Prime. The web trader lets you move between time frames instantly on the same chart. So running the top-down analysis I just walked through is seamless. Daily to 4 hour to 1 hour, all on the same pair, the same platform in seconds. The market insight section gives you the macro context sitting above even the daily chart. What's driving markets this week? Which pairs have significant events scheduled? That's the layer above time frame bias that keeps you from being caught off guard by a news-driven move. The community page is worth visiting regularly because there are traders posting analysis across all time frames, and seeing how other people are reading the same charts is one of the fastest ways to develop your own top-down process. And if you're still building your skills, the copy trade, real market exposure, professional management, right? And the ability to study the trades being taken alongside your own learning. And a final reminder, PU Prime's World Cup trading competition, right? If you haven't entered yet, details are in the description. PU Prime link is in the description as well. So everything we've covered this series is practicable on there from day one. 5 videos: market structure, fair value gaps, ERL liquidity pools, candle strength, and time frame bias. That's the foundation, and every single concept in this series is something you can go and apply on PU Prime right now. The demo account is free, the charts are all there, and the link is in the description. If you've watched all 5 and things are starting to connect, the next step is screen time. Open the charts, find the structures, mark the levels, watch how price moves. That repetition is what turns understanding into instinct. Thanks for watching. See you in the next one.